Hello there. Welcome back to Elements in Focus. Grant Soliven, Manager Advisor Operations. That's a tongue twister.
Yeah.
And always with me, Director of Financial Planning, Rheaume. We're so glad to have you back. Thanks for joining. Just as a quick snippet for those of you that are new, Elements in Focus is a time where Aaron and I get to go through our 5 critical elements and give you snack bites or golden nuggets on planning, and oftentimes things that we run into that a lot of families have questions on. So today we're going to focus on tax planning, and specifically protecting your assets from Uncle Sam. So, Aaron, when we say don't let Uncle Sam take your hard-earned assets, what are we referring to?
Yeah, that is a great question. And I want to set the precedence first. There's a major difference between tax planning and tax reporting. Tax planning has to be done prior to the year end. So this is 2023. Any tax planning you do has to be done by December 31st of 2023. Tax reporting is what you do following that tax year, where you take all of your documents, go through to your CPA or do your online tax service and start to tell the story of what you did in 2023. Getting back to Grant's question, or the statement of don't let Uncle Sam take your hard-earned assets, is really trying to be the most tax efficient with the dollars that you have. In all of our videos, we're talking about some sort of tax planning, retirement planning. And so when we look at that Uncle Sam, it goes back to figuring out what your standard of living is. I talk about this often. And creating an asset structure that goes along with your standard of living. Example, if you need $5,000 a month for you to maintain your current standard of living, here in the central Indiana, that's a pretty reasonable amount. If you need $5,000 a month to maintain that, that's $60,000 a year to live your lifestyle. What we then need to find out or look at is, what do you have from an asset structure that will help you meet that standard of living? Do you have tax deferred dollars that are inside of IRAs or 401k accounts? Do you have Roth dollars? Do you have brokerage account dollars? What income stream do you have coming in that will help meet that standard of living? Is there Social Security in the future? Do you have rental or real estate income that's coming in? Is there a pension? Once we understand what income sources are coming in to help meet that standard of living, then we can help design a tax-efficient distribution strategy. Example, so if you have $2,000 a month coming in from a pension, in that $5,000 a month need, we need to make up $3,000 a month for you to maintain your standard of living. Well, in central Indiana, or actually in the U.S., our top of that 12% tax bracket, married filing jointly, is around $89,000 a year to stay in that 12% tax bracket. We can take money from a tax deferred account and make up that $3,000 difference that you need to maintain your standard of living and keep you in a 12% tax rate or lower. That is how you're preventing Uncle Sam from taking your hard-earned assets. If you need over and above that 12% level, that's where you would funnel in Roth money or brokerage account money to where you're being tax efficient with those dollars. Did I cover what you're wanting there?
Yeah, you did, Aaron. And one thing I'll actually add to this as well, because you so beautifully put the income strategy there, is the other side of that coin is when assets transfer to the next generation. If that's something that's part of your plan, oftentimes what we find when we meet with families, some will say, we want as many of these assets to go to our kids that we don't use. Well, and then we say, okay, what plan have you set up for that? And they go, here's our will that we made in 1984. Okay. Well, now we need to start thinking about also how those assets transfer. And to Aaron's point, put a plan in place for a tax transition on those later years. And so everything has to work in coordination together.
Right.
It's not, oh, I'll think about these things here at this point in time and this point in time. Everything has to work in coordination because laws change. Uncle Sam finds different strategies to come after our money, thanks to Congress. And so we want to make sure that you're always up to speed and up to par on what's going on in the tax code, so that the biggest benefactor of your wealth is not Uncle Sam. And if that's something you're looking to actually coordinate or discuss with one of our top advisors, please schedule a complimentary meeting with us at 800-928-4001. Brittany will be on the other line to get you set up with a phone call or a face-to-face meeting. We'd love to see you and talk through this. You can tell we're very passionate about it. So the more money we can put back in your pocket, the more that we win. So please give us a call. If you have simple questions, don't hesitate to reach us at talktofeg@yourlifeafterwork.com. We're more than happy to answer simple questions as well. Or you scan that QR code and schedule a meeting too. So hope this jarred some conversation or some thoughts for you and your family. If you're looking forward to having a conversation, if you're looking to have a conversation, we're looking forward to having it with you. That's all for today, my friends. Thank you for attending, and we'll see you on the next one.